Welcome back to another episode. Today we're going to be talking about how I'm investing my money as a 21-year-old college student. Just to give you a background, I'm currently going to college studying finance. I'm working a part-time job around 18 to 25 hours a week, balancing those two. So I make around $230 a week on average. My overarching goal is to reach $1 million in my investment portfolio by the age of 30. And I'm going to take you through the steps on how I'm going to do that. I usually like to allocate around 40% of that to spending, whether that be gas, food, or just like other items. 30% of that goes to investing. Some weeks it's a little bit higher, maybe around 40%, and then the rest 30% to savings. So my investment portfolio is reaching close to $500 now. So I have 3 different portfolios for different strategies, as well as diversification. The first one is the Deep Value Fund. This is for all value investments. Just to get a better understanding, I'm looking for undervalued companies that could pay out a higher return than just investing in a broader market index, such as the S&P 500. There's definitely a lot more risk involved, for sure, and this takes around 20% of my portfolio currently. And there are many ways to value a company, such as metrics, discounted cash flow statement, and I'll make another video on how I personally value companies. The next is the Summit Growth Fund. This is all growth investments. They may not pay out as good as my value investments, but they're around that same performance as investing in the broader S&P 500. This is around 60% of my portfolio currently, but I like to keep it around that 50% range, maybe inching a little bit higher depending on what the market conditions currently are. Some of my investments are Walmart and Netflix, and this offers a lot less risk. Maybe a little bit more risk than, my other portfolio, which invests in, safe index ETFs, but this could pay out a little bit better than that portfolio. Then lastly is the Haven Fund. This is by far the least riskiest asset, around 20% of my portfolio now, but I'm starting to grow it. I invest most of my paycheck into the Haven Fund, and I'm investing in ETFs as well as the Charles Schwab Dividend Equity ETF, which pays out a very strong quarterly dividend for a low share price. And this is for my passive income investment approach, which I'm starting to build up my shares in the Charles Schwab Dividend Equity ETF. Now, I usually like to allocate my weekly investment balance, I guess you can call it that, towards the Charles Schwab Dividend Equity ETF, like I just discussed. But if there is a growth or value stock that I think is, warranted as a buy, I will definitely start adding my positions week over week into that company till I'm filled with it. Now, it's important to note that all my investments are long-term investments. Very rarely do I ever invest short-term, and I never day trade. That's definitely something that a lot of kids my age fall into the trap of. And I think that it can cause, a lot of problems, a lot more risk. This is not a sprint. This is more of a marathon, and I'm slowly building up my wealth using compound interest. Bare minimum, I'll even hold the investment is 6 months. But I usually look at investments in terms of 3 to 5 years, or even for a lifetime. My growth and value investments are certainly not quick investments, as well as my ETFs. I do a lot of research into it. I take time to research the company. I get a better understanding of their business and the products or services that they sell, as well as doing a fundamental analysis. And in terms of, the value investments, I will then do, a value analysis on the company, using a DCF, valuation metrics, whatever that be. Now, right now, a lot of people are probably asking, why am I not starting up a Roth IRA? It's tax-free, extremely safe, probably one of the safest assets. It's very extremely important for me to start building up my Roth IRA when I'm young. And, my thought process is that, I'm still young and I can inherit a lot more risk through my investment vehicles. So for now, I'm looking at individual equities with the exception of those ETFs. Now, by far, my biggest investment is definitely college. Now, I did take a smarter financial approach. I went to a community college for 2 years, and then I transferred over to a 4-year university where I'm pursuing my bachelor's in finance. I certainly won't come out with much debt. Going to a university that's close to me too allows me to work, and I can start building up my, investment portfolio now, so I don't have to wait till I get a full-time job out of college. A lot of business influencers are really hesitant on the idea of college. For me, it's definitely important, and if you take advantage of it, you go to clubs, you network, you can definitely find, a lot of advantages of this huge investment, as well as the degree. That's the most important part, and for me, with the career path that I'm trying to pursue, I think this was, warranted. Another thing is, if there's any, finance books or just educational books that I want to buy, I'll go forth and buying them. I look at this as an investment, as the knowledge I gain I can use to, make money or develop my professional skills. Right now I'm currently reading A Random Walk Down Wall Street. Check down on the link below and click that Amazon link, and you can see all of the books that I've read that are very, very good educational and finance books that could help better your investing or whatever it be. So that 1 million mark, it's kind of out there. It's pretty hard to reach 30. That's kind of crazy. I'm only at 500. What are ways I'm going to do this? Well, I'm going to work more, that's for sure. Really reduce my spending. Try to allocate as much of that paycheck towards the investment portfolio as I possibly can. As well as once I graduate, I'll be 22. I will most likely, hopefully, find a full-time job, depending on what AI will do to the job market. Who knows? But hopefully, I'll have a lot more money then, and I can start investing a lot more, setting up that Roth IRA, like I said, as well as setting up the 401k. So if you haven't already, click the link down below and join our Discord, completely free, and you get a bunch of stock market information, news, and any trades that I'm currently going forth and buying. So I hope you guys enjoyed this video. A little bit of a different setup, but drop your opinions down below on ways that I can help reach that 1 million mark. Make sure to subscribe, like, and comment, and I'll see you in the next episode.